Welcome back, guys. Is a recession coming next year? We will be looking at multiple factors, and as always, I don't want to waste your time, so all the chapters are mentioned in the description so you can skip to your favorite part. So we will start with the US 10-year yields. I've got the monthly chart over here. Some things are very obvious. For example, this trend line from 1980s has broken recently. Not only this, if you look at this purple line which represents the 100 moving average, was never ever broken, and you can see we just broke this. Same with the 200 moving average, never broken, and we are approaching. Of course, next month will be another interest rate hike, so we will break this line. Now, what does this tell us about recession? For that, guys, I will put the S&P 500 on top of this and I will show you some very interesting things. If you look at 99, look at this bottom in the 10-year yield corresponds to a bottom in the S&P 500. A top corresponds with the top. Again, 2003 we see the same thing. Bottom corresponds to the bottom. 2007 top, and then 2009 bottom. So we can see that this trend is falling. Look at this top over here and top over here, bottom over here and bottom over here. So you get the idea. Given this correlation, we know the current 10-year yield is sitting at 3.7. We know this will move towards the $5 mark given the next few interest rate increases that are expected. Now that should ideally correspond with the top of the market. So whatever the market is at that time might be the top, and once we see the yields coming back down, we will see a further drop, as we have seen the same happen historically. Look at this over here. Look at this over here. Look at this over here. So guys, you can see the correlation that a drop in the 10-year yield can lead to a drop in the S&P 500. So yeah, there is no doubt that further drop is coming. But of course, we cannot rely on only one factor. So let's move on to the second factor, which is the HYG, known as the high yield corporate bonds. Once again, the orange line represents S&P 500. So look at this huge drop in the HYG corresponds with the bottom of the market. Again, big drop. Bottom of the market. Once again, 2020 big drop, and this was the bottom after COVID. We are going down now. So does this mean that this will be the bottom or not? For that, we need to answer one question, that is this the pure bottom of the HYG or not? As I've got the monthly chart, let's take a look at the RSI. Look at this level, roughly 25, 26. This is the level from where we can identify bottom. This was one of them. Another one was here, then over here, and over here. So you get the idea. So as you can see, current weekly RSI is sitting at 30 over here, which means a little bit more drop is possible, maybe another 5-10%. That will correspond to another 5-10% drop on the S&P 500, which can lead us to the 3200, 3500, this range on the S&P 500. So another indicator telling us yes, there is some drop possible, not a lot, but yeah, some drop is possible. Now guys, let's move on to the third factor, which is the dollar index. Once again, guys, I want to show you some correlation. Look at this is the dollar index. Top of the dollar index, what, 120. I put a vertical line here. You can see roughly coincides with the bottom. Once again, guys, we can see the same correlation. Bottom on the dollar index is the top on the market. Over here also, top on the dollar index is a bottom of the market. So guys, you can see that the top in the dollar index corresponds to the bottom of the market. So the question is that currently 112 is the level of the dollar index. Is this the top or not? Me personally, I believe this is not the top. Why? Further interest rate increases are coming to the market, and I believe we will see 120, 118 level on the dollar index, which again tells us that another 5 to 10% drop on the market is possible. So this would mean that another 5 to 10% drop on the S&P 500 is possible, which will take us to the 3200, 3500 area again. So up till now, we have seen three factors, all three of them telling us that yeah, further drop is possible, anywhere from 5 to 10%. Let's take a look at the fourth one, which is the oil versus the S&P 500. The pattern we see here is that the top in oil is the top of the market. Look at this over here, again over here also, and now we are bottoming out. Oil is dropping. Again, we have to answer the question that is this the bottom of oil or not? If I look towards the RSI, we can see that the good bottoms are identified by RSI below 30 over here and over here also. Currently sitting at 35. Once again telling us that 5 to 10% drop on oil is possible. That will take us to the 65-70 mark, where the 200 moving average is lying also on the weekly, which generally is known as a very strong support. So the fourth factor also telling us the same story, that 5 to 10% drop on the S&P 500 is quite possible. So yeah, guys, you can see that these factors are telling us that another 5 to 10% drop on the S&P 500 is quite possible. US oil versus S&P was telling us 5 to 10%. Same for the dollar index, same for the HYG, and the US 10-year yield is where we are seeing a different story. Any major correction on the 10-year yield means another big drop on the S&P, anywhere from 20 to to 30% drop is possible. But guys, you get the general idea that given all of this situation, yes, there is further drop coming to the market. Let me know in the comments, do you agree with this or not, or do you think that we have reached the bottom of the market and enough tightening has been done and there will be quantitative easing coming soon? As the problem is getting more severe, we see that central banks have started to jump into the market, with the Bank of England just recently, and in the start of the year it was Bank of Japan. So yeah, let me know in the comments, what do you think? Do you think this is the bottom, or further drop of 10, 15, 20% is coming next year and that might be the right time to really buy into the market? If you like this type of content, please don't forget to subscribe, like and share. Thank you for watching.